Good morning. Welcome to Forex in Four. Today is Thursday, September 1st, 2011. Well, I think market participants are hoping that September is going to be a little bit better than last month, okay, where we saw the markets down significantly. And what we're looking at here this morning is we're just looking at the euro. And you can see the euro's sort of been on a slide here, and it's been selling off a little bit from the highs up just below 145.50. All right, we're coming back down to test the bottom of the range. We're looking at a 2-hour chart. Maybe just expand it a little bit, and you'll see okay, that we've been in sort of this range here. All right, we've got about, well, we're just right near the low on the 4-hour chart, and looks like we can go back as low as, say, 141, that area. Well, what's happening in the Eurozone? Well, a couple things. One, we've got PMI manufacturing numbers that came in, and they were lower across the board. So that shows that the economies in Europe are slowing. Two, we have a vote in Germany. I believe it's next week. What's the date? September 7th is the date where there's going to be a court ruling in Germany to determine if Germany's participation in the bailout, the EFSF, is constitutional over there. So that could have major ramifications. All right, and then lastly, after that, we have the ratification vote of the agreement that they made on July 21st for the EFSF. All right, and that's at the end of the month. I think it's September 29th that's due. And as we get closer to that, I'll give you a more precise deal. So bottom line is that the economy in Germany is slowing. And, you can see that gross domestic product figures came in for Germany. They were as expected. But it just goes to show that there's with the uncertainty in Germany, especially heading into this into this court decision next week, that we could see some continued euro weakness. Now, we're going to switch over here, and I just want to switch courses. Take a look at the pound. Okay, you can see the pound is lower, and we're coming back down. Looks like we're going to try and retest the lows just ahead of 161 as well. Well, what happens in the UK was that they also had PMI figures that came in lower than expected. Okay, and they also had a home price index numbers that showed that home prices were falling over there. They were expecting no change, and they got a decline of 0.6%. So it shows that home prices are on the decline in the UK, which is giving the Bank of England a little bit more ammo to say, hey, listen, we made the right call here with extremely low interest rates. All right, even though they've got high inflation, it looks like maybe that's going to start coming back down. So that's something to take a look at. Just want to show you here Euro Swissy. Okay, we got, let's look at this on the, let's bring it down a little bit more granular. On the 2-hour chart here, okay, you can see that we have the Swissy strengthening again. Now, yesterday I popped the chart up on the Forex News site where it shows that yesterday we said that the SNB forgot to jawbone the franc lower, and basically what's happened is that every Wednesday of the month of August they came out and they made some sort of statement about how they were going to either peg to the euro or that they wanted to weaken the currency or whatever the case may be. And yesterday they didn't do any of that, and the market said, okay, well, if you're not committed to this, we're going to test you. So we saw Swiss franc starting to strengthen. All right, and then of course we have concerns in the euro today. That's risk aversion, so that puts additional strength towards the Swissy. All right, and lastly, they had GDP figures that came in, and they came in as expected, showing 0.4% gain. So, looks like the Swiss francs may be going to retest this most recent area here, 112. All right, and there's a possibility that on the longer-term charts, if we go out and just look at an 8-hour for kicks, that we may see a return back to this 110 level. So, that's something we're also going to have to keep an eye on. What else do we want to look at? In the U.S. this morning, let's take a look at dollar yen. This is interesting. Where's dollar yen? Dollar yen. So we've sort of been in this range. Okay, we have dollar rising a little bit versus yen. All right, later this morning we've got the U.S. initial jobless claims coming out, which, it's the usual 400,000 number that everyone's expecting, okay? And then we also have U.S. ISM manufacturing. That's going to come out as well, and that's expected to decline as well. So, these numbers the market's anticipating declining numbers. Should they come in a little bit better, then, we could see a potential pop here. So maybe this is looking on the short-term chart, is a potential double top up here. All right, around 77.15. So perhaps we'll see a little bit of dollar weakness as we get a little bit later on into the session here in the U.S. All right, because we have stock futures that are down right now. Stocks are down in Europe overnight. Okay, we can take a look at gold. Gold is retreating as well. And it's just sort of sitting up there, and it's yeah, just making a little bit of a decline there, but you can see that we're still up over the 1800s, pretty significantly, right around 1820 here. Whoops, my mouse is going crazy. So that's a decent jumping off point to see what's going to happen. So if these numbers come out in the U.S. and they're a little bit better than expected, then I think we could see a pop, and that's sort of what we've been seeing recently with the market action overnight. Is that it's okay, things don't look so hot in Europe, so let's start selling, buying dollars. Okay, well, that happens, and then all of a sudden, we wake up in the U.S., futures are lower, and everybody says, hey, wait a second, things aren't that bad here in the U.S. So then, they flip the trade and they reverse it. All right, so you start buying euros, okay, you start buying U.S. stocks, the correlations take over, and then things move higher. So we get to the higher at the end of the session. All right, we have higher stocks, and now over in Asia, okay, they pick up on that and say, okay, things look pretty good, let's carry this forward. So you see Asian markets up overnight, and then all of a sudden you come back to the Eurozone and they say, okay, wait a second, we were just selling yesterday, now prices are higher than where we ended the day, let's start selling again. So you sort of have this cycle where, because the bad news is coming from Europe, all right, it looks like the European session seems to be more risk aversion, whereas the US session tends to be more risk appetite. All right, let's take speaking of risk appetite, we're going to take a look at the Aussie here. Okay, Aussie's just climbing a little bit higher, slowly but surely. All right, getting back up to these ranges right around 107. All right, they actually had retail sales figures that came in better than expected overnight. They were expecting 0.3% gain, they got 0.5%. But one of the things dragging on the Aussie is news that Chinese PMI, all right, came in lower than expected, and it's getting near recent lows. So that's going to be something that we have to keep an eye on, because as we know, China's growth and economy affects very much both the Aussie and the Kiwi, because China is the largest importer of their raw materials and goods. So you can see that. Just pulling back a little bit since we had the risk aversion here in the Euro session, but and the Chinese news, but we'll see exactly kind of what happens with that. So tomorrow we're setting up for the non-farm payrolls report, which is going to be a biggie, and that's really going to give us an idea of where we are in the U.S. as far as jobs, recovery, economic sentiment, and what the hopes are. And right now, I think they lowered the bar pretty much to about 75,000 is the expectation. So that's less than we got last month. All right, this ADP report yesterday shouldn't really be taken as any sort of correlative measure to NFP. All right, sometimes they match up, sometimes they don't. So it's really not a precise figure as far as the way it affects non-farm payrolls. So we'll see what happens tomorrow. But we could see a situation where we initially spike down if the numbers come in worse, and then all of a sudden we're going to get a bounce higher. Why? Well, because everyone's going to say, hey, wait a second, you know what? This number looks worse than expected. All right, that means that Bernanke and the Fed have to try and fulfill their dual mandate of increasing employment. So we might see further quantitative easing, which initially in the short run is going to be good for the markets, but I think people are starting to realize, hey, wait a second, all this money printing isn't really doing a bit of good here. So anyway, that's kind of what we're looking at today. It's going to be interesting to see if markets can flip it around and go back to positive, but for right now we're lower to start the day. So that's what I've got, gang. Good trading to all.